Ladies and gentlemen, good day, and welcome to the IFB Industries Limited Q3 FY2023 conference call hosted by Nirmal Bang Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there'll be opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prashil Gandhi from Nirmal Bang Equities. Thank you, and over to you.
Thank you, Mike, and good afternoon, everyone. Nirmal Bang Institutional Equities welcomes you all to 3Q FY23 earnings conference call for IFB Industries. On the onset of the call, I'd like to thank the management for giving us the opportunity to host the call. From the management team, today we have Mr. Pradeep Chatterjee, Director and CFO, Mr. Raj Shankar Ray, MD and CEO Home Appliance, Mr. Arup Das, Head of Engineering, Head of Marketing Engineering Division, and Mr. Anand Reddy, CEO of Motor Division. I would now like to hand over the call to management for opening remarks, post which we can take questions from the participants. Thank you, and over to you.
Thank you, Prashil. Good afternoon, everyone. I welcome you all for IFB Industries investors call for the third quarter FY23. Joining me today are Mr. Raj Shankar Ray, MD and CEO of Home Appliance Division, Mr. Arup Das, Head of Marketing Engineering Division, and Mr. Anand Reddy, CEO of Motor Division. Now coming to the result, growth during this quarter was 4.5%. YTD growth for the period ending December was 26.9%. Growth during the quarter 3 was flat, mainly due to lower than expected revenue in Appliance Division, mainly during November and December 2022. The company has reported a total income of 981 crores compared to 938 crores during the same quarter last year. During the third quarter, EBITDA was 33 crores, which is 6% higher compared to third quarter last year. As a result of lower commodity price, material price reduced by 2%. Material cost reduction of material cost and marginal hike in revenue resulted in higher EBITDA during the quarter. YTD revenue up to third quarter December was 3132 crore compared to 2468 crore for the same period last year. YTD growth in revenue compared to last year was 26.9%. EBITDA margin during the period was significantly higher at 145 crore compared to 75 crore for the same period last year. YTD growth in EBITDA was 93%. Major reason for higher growth in EBITDA was higher revenue. With this, I will request you to start the question answer session, please.
Thank you. We will now begin the question answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question on the line of Dhananjay Bagrodia from ASK Investment. Please go ahead.
Hi sir, thank you for taking the time out. Wanted to ask you in your home appliances business, what are we seeing? Are we seeing a general slowdown across the board, or is the company losing maybe market share? What is the situation for home appliances? Hello?
Hello.
Hello?
Areshan?
Yes, can you hear me?
Yeah.
Yeah, sure. Could you get my question?
Yes, I got your question. Can you hear me?
Yeah, I can hear you.
We can hear you.
Yeah. So if you see the the market slowdown in November and December, this was across the board affecting all companies. So the company has not lost any market share, but November and December unfortunately were 2 very bad months as far as the industry is concerned.
So was it
As
that for
far
any
as
particular segment or for all?
it was across the board, the only thing that happened in the month of December were some very high billings of air conditioners by companies to the channels, but this is not customer uptake. This was basically building up of stock. But as far as washers, microwaves, dishwashers, etc. were concerned, in general, the customer movement in these 2 months was very good.
And was it across or was it like rural or urban? Where are we seeing such a big impact?
So we've seen the impact across. There wasn't any specific urban or rural bias to this. It was a general slowdown across. Now, typically, what happens is that post Diwali, in the month of November, there is generally a lull. And there is some offtake that starts from the month of December, but this time it was an extended lull. As far as we are concerned, our focus remains on expanding our network and getting more out of our network. So IFB per se, even in a market like this, has enough levers to grow if we execute all our levers properly. But the fact is it was across the board demand slowdown in November. There's no share loss. There's no market share loss.
So just to have an idea, what would our approximate share be in this segment, market share?
So can we give you those figures separately? Because what we do is that we estimate market share based on data from suppliers, what we understand as sales. So there is one index of GFK data that we use. And there is an internal estimate we make because GFK doesn't cover all areas. So as far as front loads are concerned, our market share estimate is roughly in the range of 34-35%, considering all the data points that we have. And there has been an increase in that from the last year. And there is one segment in the front loaders, which is the 9 and 10 kg segments, in which we did not have models present, where IFB share was effectively zero. So over the last quarter, we have begun the introduction of the 9 and 10 kg into the markets, and we expect the overall market share gain from that introduction.
Okay.
As far as top loaders are concerned, our market share is in the range of around 8 to 9%, basically.
Okay. And so just to understand, let's say in top loader, front loader, how much 35%, 88%, how much is usually, let's say, 3 years ago?
Sorry, could you just repeat the question?
Let's say 10 years front loader market share 34%, how much would it be, let's say, 3 years ago?
Our market share over a 3-year period, I think, has reduced by roughly around 4 to 5%. And that reduction primarily came around 2 years back. If you look at the last 2-year period, the market share has been more or less constant. But if you take a 3-year period, then the market share reduction in front load would be a 4 to 5% reduction. And the top loaders would be an increase by about 1.5%.
Okay. 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 And so what about the other segment?
Sorry?
What about the other segment?
So if you look at microwaves, the IFB share has been constant, and it is about 22 to 23%. And the position sort of rotates between LG, Samsung, and IFB in terms of who comes in at number 1. If you look at dishwashers, our market share is about 35-36%. In air conditioners, our market share is still very low. It is in the range of around 2-2.5%.
So in air conditioners now, with more and more competition coming in, what would be our strategy now to grow the segment? Would we how would we look to compete against the others?
What we have done is that if you look at the introduction of the manufactured range that we have in 2020 and the 2 years of the pandemic and the associated problems with that, we are actually quite unhappy with the way the overall air conditioning business is as on date. And we've also reported that we've made significant PBT level losses after the investment on this segment. Now, there were 2 major agendas to profitability and also to revenues on this segment. One was the material cost. And that exercise we had started about a year back, and starting this January, the material cost reduction program is almost complete. So the effects of that will start showing from this quarter onwards. So this was the lever number one. The second was that in terms of placement of our products on all the channels where IFB is present, in the areas where we need to penetrate more through our distribution network, etc. So all the learnings that we've acquired over the last 2-3 quarters where we didn't make much headway, from this quarter onwards in terms of the placement strategy, the strategy around how to handle the channel mix, the basic scheme structure or the commercial structure with the channels, all that has been sorted out, and we are quite hopeful of good volumes on that segment from this quarter onwards. So currently, these are the two important elements for IFB on this segment.
Okay. Sure.
Does that answer your question, please?
Yeah, I just want to follow up on the AC part. How are we trying to improve that? Because every place is really very aggressive. Would we look at more movement in terms of going online or because very limited shelf space also in our store? So how would we get that?
Yes, the fight for the shelf space is a real fight. But what we have done is that we have stayed at a, let's say, premium mid-end to a slightly higher-end position consistently, and we haven't lowered that position for the last 2 years. And in the areas where we have made sales, taken counter share, the product feedback has been very good. The channel retentions have been healthy. Now, based on that experience is where the expansion of the placement and the shelf space enlargement is taking place from this quarter onwards. So, are we going to be present everywhere? Definitely not. That will take more time because our price position is also more towards the higher end of the price range, basically. And we believe that is right because of the performance and the features that we have. But in terms of getting what we want to ensure that our factory is fully utilized, that volume we are quite hopeful that we will start delivering from this quarter onwards based on all the work that has been done on the placement side.
Okay. So, would we have any target? Would we look to focus more on the mass segment, price wise? Is there any change in our strategy?
Sorry, could you just repeat that question?
You mentioned that our price point in AC is on the relatively higher side. Would we look to really focus more on mass segment now?
No, right now we are not looking at any reduction in prices or a change in the model range per se. The pricing that we have versus the features and the value, there is a settled approach in the market that is now building. So at least for this quarter and the next quarter, we will stay focused on what we have, and at the end of maybe the first quarter of the next fiscal year, then we will look at the future developments that we need to do.
Okay, sure. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Abhiral Jain from SG India. Please go ahead.
Thank you so much. Sir, I have a couple of questions on the appliances business. One is, if you could just help us understand the gross margin across product categories. So you have front loader, top loader as one, you have dishwashers, and you have ACs as a separate category. What sort of gross margin is the company realizing across, and a broad understanding would be helpful. And how much the fixed cost expense has increased because of AC plant coming in? It is now a full-fledged division versus earlier it was purely a trading strategy in terms of fully built unit being imported from China and being sold.
Mr. Chatterjee, would you like to answer that, please?
The first one is that we normally do not talk about the product-wise margin, number one. And the AC fixed, because of AC, some fixed cost has gone up, but that is more towards AC plant, and AC is being able to absorb.
Yeah, sure. So, okay, what I wanted to understand was, say for example, if appliances division as a whole was operating at say a 45% gross margin before, is AC what we understand is AC gross margin is substantially lesser. So is that right? I mean, we do not want to know the exact numbers, but just to understand the variation.
That is right. AC margins are lower than our other products.
And by what quantum, sir? Is it 10%, 5%, 15%?
Now, do not please ask me about the quantum.
Okay.
But I am saying it is the lower actually compared to other products that we manufacture. It is lower, but it has improved over the past.
Sure.
But because we have done a lot of localization and other things, so it's gradually margins are going up. But even then, it is lower than the all loading and other products.
But and so say before the plant came up, there was substantial 300 crores of AC revenues that the company used to do or had gotten to a scale. Was the margin comparable back at that time, and margin actually is lower now when you have your own plant?
Yeah, I will say it is lower now because that point of time we are losing even more, number one. And the models were limited because when you were buying it from OEM source, you never had so much of flexibility, number one. And the fluctuations in while we are importing the price increase, we had no control on those things.
Yeah. No, I understand that. All I'm asking is, say on a 4-year rolling average basis, your AC gross margins pre-2020 was, is it true that it was higher than what you have been able to deliver, say, in FY21?
No. The current position is better.
Okay. And fixed cost expense, because of the plant, the whole manufacturing overhead, how much will that be on the base? Because I see a number being called out of PBT loss because of the AC business in your investor report. So just wanted to understand what is the fixed cost annual addition that has come because of AC plant.
The fixed cost, we see that there are some increase in the manning and other related expenditure, but which is related to this thing and recovery of which has to come from the AC only. But otherwise, if you see the result, manning cost probably quarter to quarter, even last year if you compare, it has 9% increase, which is mainly because of addition of manpower and increment given to the employees, number one. And in operating expense, there is not much. There are, in fact, quarter to quarter, if you compare, there is a reduction. And operating expense, like I said, around 80 to 85% is variable in nature. And the fixed cost is very minimum there, basically. So I don't think we have impacted much there. And we have reduced some fixed cost. So there are further scope for reducing it. But of course, AC-related fixed cost, if it is there, it has to be recovered by higher revenue in it.
Broadly, and see, I keep asking this question every quarter, is and given material cost reduction program is mostly complete, you have worked on the BOM, and pricing is something that you would like to keep at the premium side. So what sort of steady state appliances division margin that you would want to work with, and which is achievable in the short term, both at the gross margin level or maybe at an EBITDA level? Because we've seen quite a lot of fluctuation around gross margin and EBITDA margin in the appliances business, which were for genuine reasons of raw material supply shortage and high commodity price inflation. But I'm assuming a big assumption is that things are settling down now. So what is achievable in the near term in the next 2-3 quarters, and what is the steady state that you would be gunning for?
Sir.
Okay. Yeah, Rajshankar here. See, uh, if you look at what we have also stated in many investor calls, our internal target is to be able to deliver a double-digit EBITDA margin. Now, the areas where we have not been able to deliver as per our own internal targets, one has been the material cost side, which was in a lot of trouble since the commodity prices moved up from Jan 21 onwards. And that exercise we have now stabilized, and it will, a lot of the pressure will come up from this quarter. And the second has been that there is a certain network that we have. There is an extraction that we should get out of it. The progress on that is not in line with our own expectations. So if you see up to the period of the second quarter or even up to October end, we did have a healthy growth rate, but even we believe, internally our feeling is that even that what growth we should have can be much more than what we are delivering. So if we are able to do on the revenue side what we are supposed to be doing, which is to be able to get extraction out, for which a lot of work is being done internally to be able to ensure sales extraction, and the combined effect of the material cost work, which is 99% complete, both put together. We wouldn't want to give a specific forecast on this, but we can be very close to a double-digit margin is what we have also said in previous investor calls. Does that answer your question?
Yeah, it does. So one clarification I need, and all this pertains to AC per se. Rest of the divisions or product categories, there is no margin or volume challenge, so to say. Am I fair in saying that?
Yes. So if you see our financial results, the fact that we are losing money on the AC segment has definitely affected the overall P&L. And what we internally have targeted is that in quarter 4 and in quarter 1, we need a specific improvement on the AC segment. When the AC improves, it has an automatic positive effect of a significant degree on the overall P&L. Yeah. So you're right in this.
And there would be a very, very high salience of Q4 and Q1 given it's a summer product any which way.
Yes, Q4 and Q1 for the AC segment are the two main quarters. You're right.
And so what we also, you had said earlier was the OEM part will also help you increase the utilization of the AC plant. So by now you would have significant visibility on the OEM volume. So is it per expectation of what you've guided?
Yes. Whatever we have been given in terms of orders for Q4 and Q1, what we need to ensure that the plant runs to capacity, it is in line with that. You're right.
And obviously a part of the BOM reduction, the pricing the improvement in terms of lower cost must have been passed to the OEM customers as well.
So with the OEM customers, there is an indexed pricing mechanism, which is based on commodity fluctuations every quarter. The pricing also adjusts every quarter. So we have a quarterly understanding with them.
Okay. No, so because all I'm assuming is I understand the indexation part for key components, but you would have been engaging or at least broadly in terms of pricing with the OEM customers. And given you've been able to achieve the material cost reduction program, so does that sort of improve your envisaged margins from the OEM segment at all, or it stays the same? As in your pricing to them was always keeping in mind that you would be able to achieve the targeted material cost reduction.
No, so yes, you are right to the extent that the material cost reduction program versus the price expectation from OEMs will help the profitability on the OEM segment. But the larger part of the profitability on the AC segment is the brand sales and the cost structure on the brand sales side. So yes, there will be an improvement on the OEM side, but the AC P&L per se improves if we sell to our target, and the material cost exercise from the month from this quarter onwards will start showing the benefit.
Got it. Thank you so much, sir.
Thank you. We have the next question on the line of Manoj Gori from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. My question here is, if you look at the employee cost on sequential basis, has increased by roughly around 9 to 10 crores. So, Mr. Chatterjee just highlighted like there were increments, but normally what I assume is, or probably what I understand is that normally the increments happen during Q1. So why this time during Q3? Any reasons specifically?
No, the appraisal and other process took little time, and that is why it was given and delayed, but it was effective April only. There is no other reason actually, but normally if you see that even in a normal increment, the effect of which comes late first quarter or in second quarter.
Yeah, but this year it's 3Q, yeah.
Yeah.
Okay. And so when we say about incremental employee or headcounts that we have added during the quarter, so those headcounts probably, if you look at the factory has been running for EC, so probably like those new employee count would be for which category? Can you throw some light over there?
This is in not so much in factory, mainly in marketing and other areas to increase the network and other areas.
Right. So, Raj Shankar, this question is for you. So probably when we say, like you just highlighted, like we have not been able to get the desired level of extraction from the channel, and still we have been deploying new headcounts, and obviously, and in fact, one compliment that I would like to give is, if you look at the product quality and the product aesthetics, IFB definitely has an edge over competitors. So whether we talk about the industry giants as well, I do believe like products are relatively better. So what are the major challenges that we are finding on the extraction side? Because this thing is something we have been aspiring for long now, on the extraction part.
Yes, so you are 100% right, and we are also internally quite unhappy with progress per se on this. And if you ask me, the primary channel is that there is a large part of the network in India which is fed through distribution, which is the indirect retail network. And this was a network that we sort of were not, present in at all. And over the last 2-3 years, there has been a lot of focus in getting the network right. But in terms of having the right set of distributors, ensuring that the KPIs in the system probably settle down well and everyone knows what they have to do, which is either the distributor or the IFB employee, that we have the product placements properly done, etc. It is taking us some time to really do this well. And we are also not very happy with the pace. But in terms of the extraction increase from the network that we have, the largest area of increasing is through the distribution network. Now, to some extent, the distribution network is dependent on products that are more mass in nature. So let's say a top loader or air conditioners. Now, the air conditioner story is still taking us some time. I believe that from this quarter onwards, the distribution network will really see AC the way that we should have been present 2 years back. The top loaders, etc., our range is still positioned high. So even though large parts of the distribution network are able to sell it, but 100% of the network is unable to sell it because our price points are higher. So to some extent, it is the product basket that we have, but more it is to do with how we are running the distribution channel effectively. And, that is the work that we have to complete, Manoj, basically. So if our progress is slow, it is slow because on that area, we are behind our own internal targets.
Right.
Does that answer your question, please?
Yes, absolutely. So one more observation has been, even in the washer, when we look at, So even in the west or in the north, when we visit the stores or in any of the large format stores like Chroma or Vijay Sales or Reliance Digital, we are able to see your front load washing machines. What is missing is your top load fully automatic washing machines are not even in display. So if we look at probably when it comes to pricing, we are very near to the largest players in the industry. But still, we are not able to see that washing machine. And the one feedback that we are receiving, especially in the West market, is that IFB should be preferred as a front load washing machine, not for the top load one. So what's actually like this negative perception among the channel, or probably what's happening over there? Because now we have done our in-house manufacturing since many years now. It's more than 4 or 5 years, if I'm not wrong, for top load washing machine. But still, we are not able to see even in the large format stores.
Yes, so your feedback is right, that the placement of the top loaders in the larger stores is below par. And in fact, from this quarter onwards, in terms of the expansion of the placement of the top loaders in, let's say, a Reliance or a Chroma, we have taken that as a primary target in terms of the large key accounts, how to increase placements of the products that we have. So that is an agenda to be completed in this quarter and the next quarter. But your feedback is absolutely right. So the top loader needs more placement from our side, because it's a good product, and the expansion in the placement itself will give a significant rise in volume.
Right. Because see, I personally use it and I am very comfortable with the product quality.
Yes.
Yes. So if you look at probably, I think it's a low-hanging fruit for us, because it definitely goes well with our front load washing machine.
Yes. You're absolutely right. It is a very low-hanging fruit, and we can get much more out of revenues quickly on this. And the increase in the placement is something that we have taken as a specific task for this quarter, especially with channels like Reliance, Chroma, etc.
Right. So one more question on the gross margins. You have answered a lot, but when I look at the gross margins in last quarter, if I'm not wrong, you highlighted like we have taken some pricing actions, and also then if you look at the commodity prices have also cooled off significantly. But when I look at the sequential gross margin improvement, if you look at the gross margins, probably those have declined on sequential basis.
I think the effect of the reduction in the commodity prices or the material cost action that we've completed comes into full effect once the pipeline inventory clears off. So this impact of the material cost on the gross margin, you will start seeing from this quarter onwards.
From Q4 onwards?
Yeah. So in the Q3, for example.
In Q3, we have got in appliance around 2% reduction in material cost.
Okay. Understood. And so last question on the room AC side. So obviously, when you look at the current scenario, so it's intensified competition, like most of the brands have been going very aggressive in pricing. So I would just like to understand your strategy. Obviously, you gave a brief description about the product portfolio. But on the channel side, when we look at, probably there would be something which even channel would be positive on, because of the higher schemes or margins that they would be able to generate on the MOPs. So what sort of margins we would be offering to channel as compared to other players in the industry?
So this varies tremendously across India. And typically, you might find that the channel operates ACs in many places on a margin of, let's say, 500 to 1500.
Yeah.
Because of the excessive presence of some of the mass brands, there is a lot of discounting that happens. Now, what we have understood based on our previous season's experience, because we sort of pursued this idea of proper pricing based on what our conviction was about the product, then the additional retention because of the lesser discounting that people made was a figure anywhere between 1,000 to 2,000 rupees. So hence I was saying that as far as the IFB retentions are concerned, the experience in the channel has been good, and that is also helping us to increase the channel size from this quarter onwards.
Right. And we have our service network in place as compared to the other players in the industry.
Yes. We have a we have a very wide and a very well-present service, equal to the best in the industry.
Right.
And it is also expanding.
Yeah. And so lastly, if you look at temperatures have definitely been picking up over last few days. And what we hear is South has been witnessing some demand uptake. Are we seeing any green shoots or probably any revival in demand, whether in rural or in urban markets or anything? That's all.
So January was better than November and December, definitely. February seems to be similar to January, but we have to wait a little bit. But the excessive downward dip of November and December has definitely reversed in January.
But we are witnessing on YY basis, at least we are seeing some growth in home appliances.
Yes, so YY growth is there, and YY growth in October was much higher. It's actually November.
The YTD growth is around 26%.
Right. So, but again, I probably if you look at majority of the growth has come from the Q1, because obviously base was a COVID impacted period. But when we look at the Q2, it was 10% growth and Q3 was roughly around flattish on YY basis. So I'm just asking like whether in Q4 at least so far we have been seeing that growth momentum.
So if you see, we haven't seen it as yet, but based on what is happening in the market in January and February, at the end of the quarter, yes, we should see it.
Yes, sir. So that was very helpful. Thanks and wish you all the best, sir.
Thank you. Thank you.
Thank you. We have the next question on the line of Bhargav B from Kotak Mutual Fund. Please go ahead.
Yeah, good afternoon, team, and thank you for the opportunity. Sir, in the press release, we read that we are sort of upgrading our IFB points at a very aggressive pace, 30 stores in 23, 150 stores in FY24. So what is the rationale for doing this? Is it sort of a brand strengthening exercise that we are sort of trying to emulate LG, Samsung, who also sort of spend a lot on the reviews, and that's sort of a brand building strategy to push premium products?
So our investments on our IB point have been consistent over many years now, because we believe that it's good for the brand and also it is good for revenue. What we have put in the newsletter is that there is a new design that we piloted, which will enhance the customer experience. So now the earlier design of the IB stores that we have, we are going to change them to the new design, and that is the roadmap. So we will be doing 30-odd stores in this fiscal year, and then a bulk of the stores in the next fiscal year. So per se, our spend on the IB point has remained consistent to what has been, not just in terms of the investment in doing of the store, but also in the marketing and the activations around the IB cards. It's a very important channel for IB.
And how profitable is this as a channel?
This is a profitable actually. This is a profitable, and from IB point on a yearly basis we have at least 410-15 crores of revenue, and margins are profitable.
What is the revenue of IFB points?
Yeah.
I missed the revenue number, sir.
400 crore plus.
Achha, 400 crore plus. And on profitability, is it similar to the company average or lower than the company average?
That's very good. I will not say, it is good actually. On the stores we are making money.
Okay. And my last question is that given that our positioning in AC is on the premium side, but if you look at the Indian mindset, typically for a Indian brand, they would sort of compare on pricing. If it is at a premium, they would go for an MNC brand. So essentially, channel incentives will play a significant role in order to push the product. So is it fair to say that our channel incentives would be one of the highest in the industry if we have to succeed in premium ACs?
Uh, Actually, no, because, one is the point on the incentive and the other is the point that I made earlier on retentions. So, you can give a lot of incentives, but if it gets discounted in the market, at the end of the day, the channel is still left with something very small. So, if you look at incentives per se, then we are in line with industry. But if you look at retention, ours would be healthier than others. So it's not that, our strategy is to offer any additional money to be able to grow this business.
Okay. So will we be spending on ad spends, meaning how do we plan to attract the customer?
Yeah. So for let's say the period March onwards, in terms of the campaigns required to create customer demand, yes, we will be investing this year in that. So those details are being worked out. In the period, let's say March to June, this year, we will be investing in creating demand.
Okay, sir. All the best and thank you very much.
Thank you. We have the next question line of Chirag Muchala from Centrum Broking. Please go ahead.
Thank you, sir. So the question is actually on IFB refrigeration. So, wanted to understand which all products are we planning under this company and what is the rationale behind not having this business in IFB industry itself rather than having another group company?
Mr. Chatterjee, would you like to answer this?
So it's a separate company. We have only participated in the equity in that company. And as of now, we have planned 97 crores of investment, which should take our share to 44.4%. As of now, we have done 69%. As of now, we have done around 37.34%. We have paid 69 crores.
Okay, so 37% will grow to 44%, you are saying?
44.44%. When we pay the entire amount of 97 crores.
Correct. And what all products are planned under this? So, residential refrigerator or commercial refrigeration, if you can please elaborate.
So, it's an independent company making its own product plans, but it will cover the entire spectrum of refrigerators in the mass segment, mass and mid-premium segment when it launches. So I think by the end of this quarter, those details will be publicly available. Right now, they are in the final stages of, putting together the product plans, pricing plans, etc.
Basically, the direct cool and frost-free refrigerators, which are basically residential refrigerators. That is what you are adhering to, right?
Yes.
Yes.
Okay. Yeah. So, sir, just if you can elaborate, since IFB industry, has been a company dealing with home appliances, right from washing machine, AC, microwave oven, dishwasher. Then why not refrigerator in the same company? And because future growth or profitability prospects, will not flow through 100% in IFB industry. So from that point of view, I was asking.
Mr. Chatterjee, would you like to answer that?
You answer, please.
So if I were to answer you, it would be answering on behalf of IFB Refrigeration Limited per se, and it might not be the right answer. So the advantages of having a focused independent company on a segment that is very large in India are the principles behind which the company has been created. So maybe you could take this question offline and then we could discuss it more.
Sure. Okay, sir. Moving to the question. Yeah, sir, it does. Moving to AC. So, sir, for this upcoming summer season, on OEM basis, sir, how many units have we contracted thus far and with which all clients? Is it possible to share?
So, the OEMs don't contract per se, but they give indications or sign-offs on an overall season volume. And then there are lifting plans that, come month-wise or week-wise, etc. But in terms of the capacity utilization of the factory, which is at roughly about 45,000 per month, we have enough to cover the factory utilization. So from that point of view, the factory will be fully utilized.
Okay. So essentially what we believe is that FY24 will see, roughly around 5 lakh volumes in EC. 3 lakh, as you have mentioned in the presentation, from brand IFB and 2 lakh possible through OEM sale. Is that right understanding?
Yes. So, that has been our intention right from 2 years ago, and we couldn't deliver it. But the combination of the actions that we are taking on our own brand sales and indications from OEM based on, the value price equation, whatever, which is now much more settled than it was, let's say, a year back. And the fact that our material cost reduction program is now over. So now we believe that, that figure that we had wanted to deliver, we are now in a position to deliver going forward.
Okay. And assuming you deliver that volume as per your target plan, will the EC division be in double-digit operating margin in FY24, assuming that volume comes?
See, I wouldn't want to comment specifically on the results for the AC division, but at those sort of revenue levels and the common fixed costs, let's say in sales, etc., the company becomes a very healthy margin situation. So, because the overhead distribution across the volumes will be much, much better than what it is today.
Okay. I got it. Thanks for this.
Thank you. Participants who wish to ask a question may press star and one on your touchtone telephone. Participants who wish to ask a question may press star and one on your touchtone telephone. We have the next question from the line of Dhananjay Bagrodia from ASK Investment. Please go ahead.
Sir, thank you again. Maybe I missed it, but how is the demand shaping up now for all our segments? Considering festive season is done for most of them, ex-AC which you mentioned, how will the remaining segment be in terms of industry demand?
So the industry demand or the customer demand for air conditioners actually starts moving from March onwards. So right now it is mostly being from companies to the channel and stocking up. The customer movement per se has not started as yet for the season. As far as the other products are concerned, like let's say washing machines, microwaves, etc., the period now is better than what it was in November and December, definitely. But we still have to wait and see. It is definitely not at the level of October, which was the season, but that is normally the trend. But it is better than the November-December situation.
And how will it be, let's say, the same time, let's say pre-COVID this month, like Jan, February, incrementally higher, or are we still similar levels?
Right now it is similar.
Okay, fine. So we're not seeing much growth as such. Sure. Thank you.
Thank you. We have the next question from the line of Vineet Prasad from Investec Capital. Please go ahead.
Good afternoon, sir, and thanks for the opportunity. Sir, I just wanted to get a sense on how competition is playing, particularly the top 2, top 3 guys. Does aggression still continue from them?
Aggression is similar to what it was. So it's not that somebody has become more aggressive. If you look at players like LG, Samsung, they have always been aggressive. Samsung specifically over the last 2 years has been more aggressive than before, which is what we have also shared in the previous investor conference. But it is similar. I mean, there is nothing special that is happening from the top players.
Understood. Sir, why I was asking this is what we understand is Samsung has increased prices after dealing with for so long, and has that helped companies like us and others to also take up price increases along?
It's a good question that you asked. We haven't seen any impact of the so-called price increase as yet. So we'll have to wait and see. As of now, the price positions in Samsung are similar to what it was before. We'll have to wait.
Okay. Okay. So the second question is on the refrigerator business. So why this tie-up or taking the business into the other subsidiary? Why not do it in a standalone entity, given that we've already done trials and testings in the past, if I'm not wrong, sometime in 2016, 17, 18. We had done a trial launch as well that time. So what is being the rationale for this, and who, if I may ask, who holds the remaining 55-56% stake in the IFB refrigeration business?
So, Mr. Chatterjee, would you like to answer the second part, please?
Can you just repeat? I explained, sir.
So, sir, I was asking is the second part of the question was in the IFB refrigeration business, who would be holding the remaining 55-56% stake?
There are a lot of companies there. There are some, the group employees of the company, different companies. Then IB Appliance is there, IB Agro is there, Food is there, IB Global is there. All of them are involved.
Okay. So why haven't we taken this project up in the standalone entity itself, given we've had some experience in the past where we have done trial runs, just launched, made a pilot launch, maybe sometime in 2017-18.
So, Rajshankar here, as I said a few minutes back, it wouldn't be right per se for us to talk on behalf of IFB Refrigeration Limited because it's a standalone company. Now, what I was saying a few minutes back also was that the focus that a standalone company brings to a very large segment with high investments and high revenues and the advantages around that would have probably been the evaluation criteria. But we could take this subject offline. Per se, for us to get the reasons why IB Refrigeration Limited per se is an independent company would not be exactly right. And they are still in the process of the final product development, preparations for the launch, etc. So maybe we could take this or in the next quarter when things are more final, we could actually put across a note for everyone on this.
Understood. No worries. So lastly, can you give some timelines on the refrigeration business, how IFB Refrigeration or from for that matter IFB Appliances or IFB Industries is looking at this business, let's say in the next year and 2-year perspective or maybe 5-year perspective? What are we trying to do here? What type of products will be launched? Will be targeting a particular segment? Any thoughts there?
So IFB Industries is an equity investor in IFB Refrigeration Limited, and this is a long-term investment for IFB Industries Limited as a company. As far as the product plans, etc., of IFB Refrigeration Limited are concerned, they are still in the final stages. So I think we can wait a quarter and we will know. My understanding is that they are planning a presence across the mass and mid-premium segments and a product range that is competitive in the market.
Okay. Thank you so much.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Abhiral Jain from HG India. Please go ahead. Mr. Jain, can you hear us?
Yeah, I can. It's just a question about the demand and the strategy going forward for the other division, the engineering division. How is the scenario looking like there in terms of, obviously from a demand perspective, how is the automotive industry we hear is doing well, but is IFB, the engineering division, winning more market share in the current existing products, and how the motor division is doing? Some broad comment on the next, how from today's vantage point, how does the next few years or few quarters look like?
I would request Arup Das to answer on engineering and then motor. Anand would explain.
Good afternoon. This is Arup Das. Answering your first part of the question, as far as engineering division is concerned, the last quarter was reasonably, the performance was quite reasonable. And of course, the month of December was a bit lull. Generally, all the OEMs shut down their plants for a week or more. Going forward in this quarter, I think the two-wheeler segment will have a muted requirement because of there is the regulation of OBD1, OBD2, which is the onboard diagnostics. So that regulation, the OEMs are trying to control the stock so that non-compliant vehicles are not left with the dealers. So February and March is expected to be a bit lull as far as two-wheeler is concerned. As far as four-wheeler is concerned, the demand is reasonably strong and is expected to grow in the same fashion. Commercial vehicle also is expected to grow. So barring the two-wheeler, this quarter, the automotive sector must do reasonably well.
And from IFB's positioning perspective, are you able to increase your share per vehicle within your existing customers?
Yeah, we try to be there where we were not there. So in many product categories of different OEMs where we were not there, we have ensured we got our business there. So the dips which happen in the market fully does not affect us because where we were not there, we were zero and now with our in that segment, we are able to increase our growth higher than the market growth.
And one question related is with the shift in powertrain from a IC engine to an electric powertrain, does that impact on an as-is basis in your portfolio? Does that impact your sales because are there a lot of transmission components which are connected to an internal combustion engine in your portfolio, or it does not impact you much? Say, for example, if 100% we were to move to an EV today as an industry for four-wheelers, what percentage of IFB's revenues would get impacted because you have a transmission, ICE powertrain related transmission components in your product portfolio?
It's a good question. If you see the market segment or market movement in the EV category, it's mainly scooters, which has picked up numbers. It's around 1 lakh volume per month, where a total ICE engine two-wheeler is about 18 million per year. So that comes to around 1.2 million going by the current volumes which the EV has done. So it is about 3 to 4% of the market. Now that too in the scooter segment. Our main pie is in the motorcycle segment, and that too on the higher CC, more than 125 and above. So this we have also parallelly moved into the EV segment. The OEMs who have already started going for localization, the big players, even the smaller players, we are already pitched in. We are developing components. So localization is happening. Once it happens, we will be ready.
as far as four-wheeler is concerned, other than Tata Motors, the main player, the numbers other than them are pretty low. It's around 6,500, 7,000 a month compared to 3.5 lakh volume of four-wheelers which happens every month. So going by these numbers, I think the disruption which you are talking is very logical. We feel we don't envisage any risk, at least at this juncture, as far as dropping our sales, because we are getting into businesses in the non-automotive sector also, which is unique. So, IC neutral. So, it will not impact much as far as IFB is concerned. We are placing our product category in such a way we don't get much impacted.
Okay, sure.
This is Anand here. On the motor side, right now the appliances motor, we are investing around 40 crores to build up a capacity of 2 million washing machine motor and air conditioner motor, 1 million each, for which there is a huge demand outside of our captive requirements. We plan to sell 50% of our capacity outside of this captive needs. And on the automotive motor, we have augmented our product lines by introducing wiper motors and other new products like BLDC engine springs and motors, which we should start production within the next 2-3 quarters. And we hope to have a increase in top line by around 40% for the next financial year in our automotive motors.
And sir, the 2 million that you talked about does not include automotive and BLDC motors?
No. It's 1 million of washing machine BLDC motor and 1 million of air conditioner BLDC motor.
Okay. So, and again, a moonshot question, not a moonshot, but say a 3 to 5 year horizon question is, what would be the total revenue potential, both captive and outside, for the motor division?
It would be roughly around 350 crores.
Okay. Got it. Thank you so much.
Thank you.
Thank you. We have the next question on the line of Sudarshan Mal from City Investments. Please go ahead.
Hello. Thanks for the opportunity, sir. So my questions were more pertaining to that refrigeration business. So while Raj sir has said that it would be inappropriate for him to comment, I do. However, if I just can know the financials of the business currently.
Financials of which business, please?
Refrigeration business.
So
it has not started yet. Actually, it will start from April beginning.
And Shankar here, I have a suggestion because there were two questions before this also, and now you've also asked this. What we can do is that in the next quarter, there can be a formal note on the refrigeration company per se, and their product range, product plans, pricing, etc. would have been matured by them. Would that help?
Certainly, that would help because we are paying pretty good amount of funds from our balance sheet. So it would be interesting to know what is the opportunity size there. I believe it will be very big.
So for the opportunity in IFB Refrigeration Limited that IFB Industries sees as a result of its investment, and what the plans are for that company, etc. I think what we can do is that because there are 2-3 questions on this, Mr. Chatterjee can actually share a formal note on this in the next quarter, and the plans for IFB Refrigeration Limited will also be much more mature by then. So I think it will be the right time to share it with that. If that is okay with you, then we will do this.
Certainly, sir. That will be very helpful. Just one question regarding this, if this can immediately. Who owns the brand IFB? IFB Industries or refrigeration company?
IFB brand is with IFB Industries Limited.
Okay. Okay. Thank you, sir. Thank you. All my other questions have been by and large answered. Thank you.
Thank you. We have the next question from the line of Manoj Gori from Equirus Securities. Please go ahead.
Yeah. Thank you once again. So my question is more to do with the slowdown in demand. So Rajshankarji, if you can highlight, because see, normally when we look at over last 3-4 months, even the inflationary pressures are definitely seen to be behind us. And things have cooled off significantly when we look at the RM prices or probably the freight cost or even the food inflation. So what's actually weighing on the consumer sentiment, like based on your internal assessment or probably the feedback that you would be receiving from your partners and from your employees? It would be great if you can share some light over there.
So, Manoj, and you will remember that on this point, we also had several rounds of discussions before. I will tell you how we look at it. So, if you speak to the large partners across India, if you look at what's happening with competition, etc., then the voice that you will get is that there is definitely a tempering of the demand. And you will hear that November, December was bad for everyone.
Yes.
So, if we were to look at the voice from the market, the voice would be that demand is tempered from, let's say, the peak of the post-lockdown period or what you would generally expect from the counters where the flow of customers is more or less regular. But the way internally we see this is that, given the network size that we have and this agenda or extraction that we still need to do much better, and the opportunities that we have by doing the distribution piece very well, which I was explaining to you a little while back, that in terms of
to interrupt you, the question was more from a macro point of view, because I know obviously you have been taking efforts and obviously you are not the one only to get impacted in the current slowdown. So it was more to do with the consumer mindset, like what's actually stopping them to buy consumer durable products or the home appliances products. Because see, I personally believe like inflationary pressures, especially the last 3-4 months, are definitely behind us.
So if I were to tell you honestly, Manoj, we don't really know. So if you were to ask me, why did demand go down in November and December, the honest answer is that we really don't know. There is, yes, impact of, let's say, higher prices across the board. But there is also a reality that the financing available to consumers currently is mitigating a lot of that inflationary pressure. Now, what I mean by that is that assuming that a product is costing 3,000 rupees and now it costs, let's say, 3,500 rupees, if you really look at it in terms of the financing options available to customers, then the actual per month impact is very little.
Yes.
So it is not that, everything can be answered by inflationary pressures. There is much more than we can do as IFB to get more demand. And if you really look at what happens to the demand per se, that you may see 2-3 months of subdued demand, but then invariably another month or two comes where the demand is much than normal. So if you per se look at the macro picture the way you're wanting, given the low penetrations in India, medium term, the demand, the problem should not be there at all. That is my personal belief.
Right. Got it, sir. That was the only question, sir. Thanks, sir.
Thank you. That was the last question. I would now like to hand it over to the management for closing comments.
Thank you, everybody, for joining the call.
Thank you very much. On behalf of Nirmal Bang Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.